But it's about 9:15. Welcome back. Hope everybody had a good evening. We're going to reconvene the meeting of the Texas Emergency Service Retirement Systems, and I'm going to ask let me get my agenda. I'm going to ask Trustee Larson to do roll for us this one.
Okay, Frank Torres.
Here.
Gracie Flores.
Here.
Dan Key. Here. Ron Larson. Here. Jenny Moore. Not here. Taylor Allen. Here. Dennis Rice.
Here.
Don Shipman.
Here.
Steve Williams.
Here.
Okay, let the record show we have 8 of the 9 board members present, and we have a quorum. We're going to start
Do we
this.
need a motion to excuse Jenny?
We
did yesterday.
We did it
Do we
yesterday.
need to do
Do
it
you
again?
want another one today? Probably wouldn't hurt to go ahead and get
I'll
one.
make a motion to excuse Jenny.
Second.
Good, motion and a second to excuse Jenny Moore from our meeting today. Any discussion? All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion carries. Okay, we are going to continue with evaluations and rules. Ron had an item that he needed to review, and I want to give a special welcome to our retired vice chair, Mr. Alan Scopel, who served on this board for 8 or 10 years. And so, Alan, welcome back. Ron, your meeting, sir.
Okay, Mr. Scopel brought an issue to light that we need to address. It's going to have to take a legislative change to be changed. But right now, the way the rule reads, the local board is made up of 3 active volunteer firefighters, but there's no rule. Well, the problem is that once you don't have active firefighters, then what do you do? And this is what, it's going to take a legislative change, but we'll let Mr. Scopel explain the issue.
Good morning. I know the group on this side of the podium, but I don't know this group over here. But anyway, I did serve on this committee for about 10 years, back in the 2009 and, I'm sorry, 2009 was the end of it. But I also served when we had a lot of different technicalities we had to take care of. And I understand yesterday y'all had part of those issues to take on again. So I was here whenever we changed the rates up to $36. So I was out there getting knifed and all the rest of it, but we're okay. Anyway, what I wanted to talk about today is not covered in the law, as Ron has mentioned, are the rules of operation. But what are we going to do when a department goes to total paid and no longer have an active volunteer corps, such as Dan will tell you down in the Gulf Coast area? It's a very prevalent issue down there because we've got large ESDs and they're putting on paid firefighters all the time, and therefore the lack of need of volunteers are there. My department, Rosenberg, I never thought I'd see the day that we did not have a total active volunteer fire department. We do have 3 or 4 in there that I have to say that I'm glad, as a retired person, I was able to bring some young people in there in the last year. But they are down to where they do not have 3 active volunteer firefighters. The area up in Dallas-Fort Worth, they have the same type of problem. I visited with some of those departments at Lubbock for during the planning conference for our convention in June. So anyway, the major issue here is there are departments that have COLAs going on, and without this group of people in there, active volunteers on a board or somebody to fill into those positions, we do not have that issue going on. When Linda Havosky was working for the pension commission, she always told people whenever that happened to go to your fire chief and have your fire chief do the filling out of the paperwork. If you had deaths, you had new spouses, etc. Well, those of us that have paid fire chiefs that are coming in new, most of those guys are coming out of a paid group, and they have no care or concern as to whether the paperwork gets done or doesn't get done. Rosenberg, fortunately, the fire chief there, I trained as a volunteer. He's very active with the retired firefighters, as well as trying to get volunteers in there. So he is also concerned about this issue. My suggestion in trying to look at doing this, also let me back up one other place. We also will have a problem with the citizens. You have 2 citizens that sit on that committee. And if you do not have the active volunteers, they're the ones that appoint those citizens. Therefore, you've got another activity issue. So, Ron, that's something else that we need to address in that law at the same time. I've got a couple suggestions here. They're probably not the foolproof deal. I think the overall picture is there's going to have to be some addressing to the volunteer departments out there, as well as some of those that have retirees in them. My thought was that it'd be a setup, either one, for the fire chief to appoint 3 retired volunteer firefighters to that committee, or if less than 3 appointed, then at least 2 or 1 until there are no other retirees there. And then the question would be, do we look at members' spouses that are drawing revenues out of the pension fund to be on that committee to replace in case we have a problem there? When we get down to, say, Rosenberg, we've got a COLA program down there for the retired firefighters that the city council has approved 7 years ago, and they said, we do not want to address this again. You do this every year. Well, unfortunately, our active volunteers on the committee forgot to do that the last 3 years. So now I'm trying to clean up that little mess, which we think we're going to have that taken care of. But anyways, the other thing would be, or retired volunteer firefighters meet and elect 3 retired members to that program. And then we could also look at retired firefighter volunteers electing 2 citizens, also to elect the 2 citizen members too. If the fire chief refuses to participate, what steps will we take then? Do we involve the municipality? Do we have our city managers, our mayor, or one of those individuals become involved in the program? So it is an issue that's there. It's going to be, it will not be something we'll solve overnight. So if I can help y'all in any way on this, I'd be glad to share my technicalities or involvement.
First of all, can I get you to send me an email with notes that you've got there?
I'll give these to Michelle.
Okay. And then this is probably something that Jim and I have put together some wording before the next meeting, right? And then staff take the legislature. If the board approves taking it to the legislature.
I would recommend that we put it, if the board feels it is an issue that needs to be addressed, that we put it on our legislative agenda along with other items that need cleanup in the statute, and we'll do them all at once.
I think it's an item that needs to be addressed because this is only going to get worse.
Correct.
And will that be a legislative committee item?
Yes.
Yeah, we'll put it on, we'll get it on.
No, so I think it probably will take a little discussion to come up with what we want to propose as the fix.
Right.
I mean, so I don't think we're going to be able to go right to language.
But he's exactly right. This is an issue that's just going to get worse and worse and worse every year, so we've got to address it now.
Do we have any way, and we might have it through our records, to tell for our plan how many we think are in this kind of a, either below, either at or below the 3 or close to the 3? We could probably look on some of our logs, right?
Yes, sir. I think that we could, it would be a manual process, but I think we could go through and look and see how many actives we have at departments and make that guess.
Actually,
Michelle, in that same issue there, you may have what we think are active departments, but they may not be active due to a chief's situation. Okay? I refuse to put any people out there. It's not Rosenberg either, so, because my chief, he's 100% behind getting this thing fixed. And when I sit on that board up there, I never thought about this. So, it's something that we should have fixed a long time ago.
Well, it's not an issue until it becomes an issue.
That's true. Right.
Well, even on the Board of Trustees, we've only in the last legislative session did a wording change that allowed a retired member of the plan to sit on this board. And now that's sort of trickled down to the local board level where we have folks who are retiring from the departments and they're on the local board, suddenly they're retired off the roll and they're having to step off the local board. And so, yes, it is a little catch in the wording that it needs to be fixed. We think we've remedied it here on the Board of Trustees, and that it needs to go down to the local board level to give them that flexibility to maintain the local board numbers that are required.
And just based on, I kind of answered my own question, just based on that log of departments and what their premiums were, it does look like we have 6 or 7 that are already below 3, or 1 or 2, and there's a few more that are 3 and 4, which means they're probably heading that way before too long. So it does sound like this is a good time to deal with that, definitely.
Do we see any correlation between the smaller departments filing their annual reports due to this potential problem or not?
I don't know that it is directly attributable to that problem, but the smaller departments are tend to be less organized. It's I would say that the ones that requested an exemption to turn in the annual report late, most of them were very small departments.
Yeah. And that would figure.
In the issue, I think, comes that volunteers today have so much that they have to get in under their plate, let alone their families. This is probably one of the least of their worries. Now, they're retirees, it's a different story, but those that are active, it's not a big deal to them.
Yeah, and I think you hit the nail right on the head. It's when you're 25 and 26 and 27 and even 30, the last thing on your mind is retirement.
Yeah.
When you get your age and my age, and we start thinking about, hey, wait a minute, I made it. I think this shows us why it's so critical that we make sure that our retirees stay involved within their departments, their respective departments, and their respective municipalities. We do a really, really great job taking care of as a department, our members, but we forget that those that came before us helped us get to where we're at today. And so if we can help to get the younger generation to understand that you're old for a reason.
Yeah.
And these guys get retired and they still have a lot of knowledge. Just because they're retired, they don't lose all the knowledge and experience that they gained during their fire careers. So I think this will help us keep the retirees involved and help us provide a better system.
Yeah.
Any other questions for Alan or comments?
We thank you for bringing this to our attention.
Thank you. And I'm getting ready to leave. I've got a meeting in Rosenberg at 4 this afternoon, so I'll give this to you.
Okay. Alan, thanks for being here. Appreciate you coming up.
Call me.
Say hi to Susie for us.
I'll do it.
All right, sir.
Nice seeing you.
Have a safe trip back.
Thank you.
Okay, to go into executive session, we're going to go into that other room, right?
You'll say,
Yeah, I've got this.
and then it will leave, you'll stay here.
We can't because we're streaming live.
Okay, yeah.
Okay. Okay, we're going to, with the board's permission, what I'd like to do is go ahead and take care of item 11 on our agenda this morning and do the, so at this time, in accordance with section 551.074 of the Texas Government Code, the Texas Emergency Services Retirement System will meet in executive session to deliberate personnel matters for agenda item 11 regarding the executive director evaluation, and thereafter may consider appropriate action in open session.
Correction, no, it's agenda item 12.
It's 11.
It was changed to 12.
No, but what we're deliberating matters for agenda item 12.
That's true, yes. You're right. So it's going to be agenda item 12 that we're going to discuss, but this is item 11.
So Frank, do we move to the break
So
room or
at
get
this
off the
time,
camera?
the board will go into executive session to discuss. I believe we're going to have to go in there because of the live streaming is.
May we ask Susanna a question?
Hey, Jim, do we stay here or do we go in there because we're on a live stream?
Yes.
Okay, sir.
Susanna, do we have one of those committee rooms still reserved today?
No, it was just
Okay.
yesterday.
Okay.
We can move in there.
Okay.
It'll be tight, but we'll do it.
And then we can have a soda or something, too, if you want.
So we'll be going into executive session and we'll come right back as soon as we're done.
Nice to see you. How are you doing? Doing okay?
Hey, Mark. Look at this. Mark. Is that on tape? Like, you're still being streamed.
All right, Ron, we have tickets.
We got, okay. Now, what are we owing, 20?
1882.
20.
That's what it came out to.
It's your call. I mean, I'm not telling you how I'm saying.
Okay, thank you. I'm trying to figure out how to discipline them because it wasn't working. So it says you can do it on your own. You scan your phone. I just want to make sure I can do that before we get there.
Occasionally when I go on plane
I'm planning to do it. Mine never works.
my work's occasionally, you know what I'm saying? Really?
I was just printing because I never can get it.
Yeah, I'm just not the only one, because I can't tell you how many times.
Y'all going to have a party? Frank, we have our tickets.
Oh.
1, 2, 3.
Oh, wow.
All 10 of them. Just gonna leave that on there, on my phone.
Oh, yeah.
Till we get there, and I don't have to try to access them again. Seems to be working. We should stay at the freaking hotel. Maybe they were gonna go into this, so. Do you know what Alan brought up? Is that same thing we kind of addressed?
I know.
With that let's stay on,
Right.
and let, Lyman stay on.
Mm-hmm.
Because we don't have, because we do 5 people. State law says 3 active volunteers. But it also is another argument for allowing people to be active retired.
Yeah.
Chris Loman called me yesterday.
Yeah.
You may remember, he put in a letter of resignation, and then he withdrew it at the last business meeting.
Yeah.
And he hadn't made a call the whole month.
Yeah.
So he called me yesterday, and what happened is he didn't end up leaving to move to Louisiana for the job.
Yeah.
He took a new job here, but his schedule's all chaotic and everything, and so he asked him, for some advice on leave, what he should
Right.
do. And I explained how the leave of absence works, so I think he's going to send him a letter for a leave of absence.
into regular session. Going to move on to item 12. Give everybody a report on our evaluation of the executive director. The board reviewed the evaluations, and she had a very good evaluation, rated very highly by everybody on the evaluation committee, which was the entire board. And so at this time, I will entertain or any comments from anybody on any of the board members regarding the evaluation, if there's anybody on the board that would like to make a comment.
Sure. I would just like to publicly say, Michelle, we appreciate what you've done for the 6 months you've been here and the direction you have us headed. We appreciate it.
Thank you. I also, Michelle, wanted to say thank you to you and your staff for all the great work you're doing, for preparing all the information to make our sitting on this board a pleasant experience. And we really do appreciate what you're doing.
Anybody else?
I would like to say thank you to the board for the remarks, and to say that, and I mentioned this to you in the closed session, but we could not have accomplished what we have so far and what we will accomplish without the support and this hard-working board and the hard-working staff and all of us together working as a team. So I'm really appreciative of everyone's work.
Again, Michelle, thank you for a job well done to you and your staff for everything that we've accomplished. Thank y'all for. Does the board have? Is there anybody on the board for any action we want to take?
Mr. Chairman, I'd make a motion that we increase the executive director's salary to $90,000 a year.
Okay, I have a motion by Mr. Rice.
And I'd like it to be amended to allow for it to be retroactive to the 6-month anniversary of March 1 if possible, but otherwise April 1.
Okay. Is that okay with you, Dennis?
That's fine.
That we'll have to look into whether we can do the retro, but if it is reasonably feasible, that would be good.
Okay.
That's fine.
I'll second that motion.
All right, we have a motion and a second. Any more discussion? All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. Congratulations. Thanks again for a job well done.
Thank you very much.
Okay, our investment group is flying in. We didn't expect to be this far up on the agenda, and we actually had them scheduled to start at 1 o'clock this afternoon. So
We haven't had another motion regarding that we want to do. We'll
yes.
Get that out of the way.
Yes.
And then do we also want to go ahead and discuss for our next
Yes.
meeting?
So we're gonna leave item 10 and try and get investment to start hopefully at 11:45 or so. We've got a couple of cleanups that we need to cover. I know on the executive director's report yesterday we talked about renewing, I believe it was the actuary contract, or extending the actuary contract and the finance, or
The internal.
the internal
auditor, is that?
accountant.
Judy, what are you, the internal auditor? What do we call you?
I'm the contract.
Contract accountant.
Right. And so we need to come back and either affirm or not affirm the ED's recommendation to renew the contract, or extend the contracts.
Or authorize her. So I'd like to make a motion to authorize our executive director to extend the Rudd and Wisdom and the contract accountants term or contracts for one additional year.
Okay. So we have a motion to go ahead and extend.
Allow her to extend.
Right.
You'll do
The contract with Root and Wisdom and with Ms. Johnson. Any,
For fiscal year 15.
Oh, it is, yeah, it's an extension for the fiscal year to include the fiscal year 15, but they were already through 14, so a one-year extension does the fiscal
Right.
year 15. Okay.
is there a second?
Second.
Second by Ron. Any discussion? All those in favor signify by saying aye.
Aye.
Opposed, same sign, motion carries. Okay, yeah, we'll just wait on them. And then what I want to do is, do we have, there's the meeting dates. Can we look at the meeting dates and I know we all had a range of dates that we were going to look at. And
This is what everybody agreed to in Austin, and this in August with the location.
okay, we have for June, we're looking at June the 9th and June the 10th, and that meeting would be here in Austin. Is everybody okay with that?
What days of the week is that?
It would be Monday and Tuesday, so Sunday would be a travel day.
We start first thing on Monday?
Well, we could start at 1 on Monday and then finish Tuesday.
Well, that saves a motel room money.
Yes, that's true. Yeah, we can do that.
How long a meeting is that going to be? Is that going to be enough time?
Day and a half.
Yeah, it should be.
Sure. So for this June meeting, the things that we know of right now that may need to be considered would be to approve the strategic plan for submission to the Legislative Budget Board. It would be to authorize the rules that are being proposed. It would be to do the investment asset allocation. And I think I understood your agreement to, that we should notify departments about our proposed rule and invite them to this meeting. So I think it may depend just on how many folks do show up, but
Okay. Okay, so
Are you going to put the invitation for the departments to speak on, like, on the web, or?
yes, sir. And I drafted a letter that I'll have Frank and Gracie take a look at, and everyone else, if you like, that I planned on sending out to the departments as well.
Question would be, is there any way to get them to email you back so we have a rough idea before the meeting who's going to want to come in and speak?
We can ask them to do that, but under...
I mean, I know it's not,
Yeah, they could show up under
I
the
know.
public comment, but yeah, we can ask
just so
them
we have
to
a
let
rough
us
idea
know.
if we're looking at 2 hours worth of
just for
public comment,
scheduling,
or?
yeah, just for scheduling purposes.
I think that's fair. Jim?
Okay, so June 9th and 10th in Austin.
Starting at 1 on June 9th.
Yes, sir. And that would give us the opportunity to fly in or drive in on Monday morning. And then our August meeting, August 4th and August 5th was what we were looking at. And the location is to be determined. It's typically our travel meeting where we go to the different member jurisdictions to encourage participation from the local departments. So, but those are the dates we're looking at, August 4th and August 5th. So, does anybody want to volunteer their area for a meeting place?
We come to the Panhandle if y'all want. And if we'll travel on the 3rd and get there, we can,
Sure.
that'll work, because you need the 3rd for your travel day.
Yes.
Since, I'm kind of
It's a good 8-hour ride.
For you, I'm sure it's a few more than that.
Would that be in Canyon? Is that?
Well, we'd either do it in Canyon or Amarillo. We can work this, people would fly into Amarillo, but,
I think that we did, the last time we've been to Canyon was 98 or 99, I don't recall.
probably so.
And I think we met at the fire hall.
Yeah, we'll find a good location, and I got some feelers out right now.
Okay. Is everybody okay with going to Amarillo Canyon for the August board meeting?
I've always wanted to visit Alaska.
You're going in August, so it'll be warm.
August, we'll have everything you have in the Metroplex, excluding the humidity.
Okay. So we'll meet in Canyon then, in August. You'll be flying in, if you're flying, you'll be flying into Amarillo.
And I'll work the details out with Michelle and her staff and
Okay.
have the
And
information.
what's the
by
dates
June.
again?
August 4th and 5th, also a Monday and Tuesday.
Same thing, starting at 1 or starting first thing?
Travel on the 3rd.
We're going to travel on the 3rd.
Yeah, you're going to travel on the 3rd.
We can start.
I'm a driver.
Probably better to have a full day and then maybe a half day, and that way you
We can start
travel.
at 9 o'clock in the morning on Monday,
I like that.
and then do a half day on Tuesday, and that way people can get back on Tuesday. We do a full day. We're averaging about a day and a half for our meeting, so I'll get home at midnight if I drive instead of 4 o'clock in the morning. Okay, so that's what we'll do then. We'll meet in Amarillo Canyon, August 4th and 5th, and your travel day is going to be the 3rd, which is the Sunday. Everybody okay with that? Okay, at this time, I'm going to open up the floor for invitation for public comment. If there's anybody in the audience that would like to address the board, I'd like to give you some time right now.
My name is Ed Keenan. I'm with the Pasadena Fire Department. I'm also the Vice Chair of the Pension Committee there. And one, I'd like to start by thanking all your service. I know this is a volunteer position, and I know most of you are volunteer firemen also, and I do understand the time and commitment it takes to above and beyond what's required from your local departments. After listening yesterday and talking with a few of you last night, I'd like to comment on the, I guess, Part 2 or Tier 2 fee or contribution or whatever we're going to word this. I do understand that. As far as the need to keep the plan solvent. There's a lot of issues that has put this plan into position it was and beyond the board's control. Like a poor market, but also, I feel that the state has not stepped up to its obligation in the past and has put the fund in the situation that it's in. And I feel that now we, as a board, and the volunteer firefighters now are going to have to make the decisions to get the plan right. And it's basically on our backs. since it looks like this additional funding source is going to be required, two things that I would like to request is the first, that this fee only be applied to, in the calculation, only be made to actuarial adjustments. That no administrative costs or adjustments be used in determining the fee amount that would have to be charged to the member departments. I think that's a fair way of doing it. I think it would go over better at the departments that way. Secondly, I do have a concern more toward the Pasadena Fire Department, and that is at the current, if we look at percentage of contribution method, we have a member of a department that they only contribute the minimum. Their portion would be roughly $65, where you're asking a Pasadena fireman to lose out $238. So I don't think that's fair. Firefighters, especially volunteer firefighters, sacrifice a lot, and they are very understanding. They understand sacrifice, but to ask a Pasadena firefighter to sacrifice almost 4 times what another firefighter would, in order to make this right, I think is a little bit above and beyond what is fair. So when we look at this, we may look at a fee per member versus a % of contribution. So keep that in mind when you take a look in determining the fee or whatever we're going to word this, when it's applied to a department, to keep that in mind. That's my big concern on that. And that's the only real issue right now I have, but I also would like to comment on the need for the pension board here to understand how important it is to increase our drive to getting more funds into the system. And the only way that is basically sell our way out of it. And that means getting more money in more active departments. And if that means maybe bringing on another person, basically a full-time salesperson to go out and contact these departments, we need to do an analysis on that. This is what that person would cost versus what they're going to be bringing in. As Alan spoke earlier, if we don't do that, we're going to suffer a slow death. So I really think we need to concentrate very heavily on the, quote, sales effort in order to be bringing in more departments. With that, more funds that we can invest, and then we can basically sell and invest our way out of our current situation. So, as we talk about it, and you talk about that, and I know we have a planning session tomorrow, we need to keep that in mind. If you take a look at situations like that, I run my own company. I've done it for 15 years. I've been a controller, an accountant for 35 years. So, you can either sell your way out of it, you can cut your expenses, or a combination of both. The expense level for to run this pension is really not that great compared to what we have to overcome. So really the most logical way is we're going to have to sell our way out of it. So that means bringing more funds in. So again, I'd like to thank you for your service on the board, and I really think that we can get out of this predicament we're in, and I I really think that this board and what the state has done to help support our volunteer firefighters is really a great thing. Thank you.
Thank you, Mr. Keating. Appreciate your comments, and thank you also for your service in helping us with our local group. Chief?
Not a long line, is there? Good morning, board members, Mr. Chairman. Again, my name is Robert Heminger with the Pasadena Fire Department, local board chairman. I've got a few different subjects that I wanted to touch on. Some of these items I've addressed individually with the executive director and her office staff, but I guess for the record and for the board members' general information, I just wanted to put them out there as general comments. First, I'll extend a congratulations to the executive director on the job that you've done so far and on your 6-month evaluation. And these aren't really in any particular order. They're just as I was making notes as the meeting went on, so I apologize if they seem a bit combobulated, you know. But in reference to benefit statements, one of the things that I recommended to the staff was perhaps as a mechanism to save postage, those benefit statements could be sent electronically to the member department and then let them take on the burden of distributing them to their members, at least for the active folks. Maybe those vested terminateds, maybe that wouldn't be quite as easy, but at least for active members, I think that would save a bulk of the postage. Let them put them in envelopes and distribute them to the stations or mail, whatever they want to do. But I think I certainly would be open to doing that for our department, and I think you would find support, you know, if it would help save the system a little bit of money. It's probably not a great big deal of money, but every little bit helps. I also, something was commented yesterday, and I'm not sure who would be the best to specifically address it. I did mention it during the executive session to the executive director, and that's in reference to the actuarial assumptions in relation to service credit. When the discussion occurred yesterday, it was discussed that the data corrections that are occurring from missing annual reports in the past that are getting corrected now could result in what could be a fairly significant actuarial loss to the system, because we're finding out that folks had service credit that weren't attributed. My thought would be the prudent thing to do would be do just the opposite, make just the opposite assumption. I would expect that probably 80% or more of our active firefighters in any given year receive service credit. In Pasadena, it's probably 90% or more because we stay on the folks and are pretty diligent about that. But I would think system-wide, it's certainly better than probably 3/4. So to me, to make the assumption that they didn't receive credit until we get the annual report seems backwards, because we know the percentage is probably much farther on the other way, and if we assume they made credit and make our actuarial assumptions off of that, the only thing that would happen when we correct data is an actuarial gain for the system. So we would somewhat be overly conservative in that manner. Just as another thought or suggestion, I did discuss yesterday the potential to cap the number of years of service past 15 where we accrue the 6.2%. I think that was already mentioned, and I think what former board member Scopel mentioned earlier about allowing retired members to serve on local boards, I think that even speaks to what I suggested yesterday is in a need to support an active retired classification of membership within the local departments. Maybe that active retired category is still actually actively fighting fires. Maybe it simply means that they are actively serving on their local board, but it would be a mechanism
by which the board could support. And like I said yesterday, I think that would also limit our exposure to the years of service past 55 that are continually increasing the liability on the system by adding that 6.2% interest rate on top of them. And I had as a note also to make a comment what Mr. Keenan mentioned of I do think it would be a little bit more equitable for us to consider a flat Part 2 contribution. I just feel like having a percentage somewhat penalizes those departments that have been rewarding their volunteers or have really worked hard to increase their contribution rates for their volunteers. That to me doesn't mean they should pay a bigger portion of that unfunded liability or that fee or whatever the word is we're going to use. I think if the formula were written such that, and I think even your present wording probably would support if it came out to $10 a month per member in the system. By the wording, it says it can't go over 15%, so maybe it's $10 up to 15% of their contribution. So some people might be paying $5 or $6 a month, and the cap would be $10. It's still much more equitable than looking at a Pasadena firefighter that currently would be paying $20 a month, where you have some that would be paying in the $5 to $6 range. And we have some departments that are making a higher contribution than Pasadena. Those folks will be some of them up to $30 a month per firefighter, and I don't see that as being equitable to all of the members of the system. I think that is just about all of my prepared comments. So I'll just reiterate what Mr. Keenan said, and thank you all for your service. And I know it's tough sitting up there. There are some tough decisions that have to be made. I wish more of our participating departments would be here to show their support as well and to offer some assistance and thoughts. But until we get there, I know we're happy to help any way we can.
Thank you, Chief. Thank you and your department for consistently attending our meetings and being an active participant in the fund. Thank you. Okay, it's about 10 to 11. We don't expect our next presenters to be here any earlier than 11:30, so we'll be in recess till about 11:30 and try and reconvene our meeting about 11:45. Okay? So we'll be in recess. It's approximately 1:50 p.m. We're going to reconvene the meeting of the Texas Emergency Services Retirement System. And let the record show we still have a quorum to conduct business. A couple of things. We went back and during lunch, a couple of the board members mentioned that there's a possible conflict with our June meeting. Apparently, the date falls right in the middle of the state convention. So when we're done with our investment committee report, we probably need to sit down and hash out a date. So my apologies. We thought it was the week after, but apparently we're going to be right in the middle of the convention. So we probably need to adjust our meeting date. So as you all know, with the departure of the retirement of Mr. Patterson from our board, during the in-between meetings, after it became official that he was retired, I asked Gracie if she would consider serving as our committee chair for investment. She graciously accepted. Thank you very much, Gracie. So at this time, we're going to hand the meeting over to our investment committee chair, Gracie Flores.
Thank you, Mr. Chairman. First item, I would like to turn it over to Michelle Jordan. We need an update on the guidance to the money managers doing business in Iran. Michelle?
Sure, thank you. You may recall us speaking about the pension board recommendations on reporting for scrutinized business operations in Iran. There was a legislative requirement that Pension Review Board develop a list of scrutinized companies, and then pension agencies report back on their business dealings with those companies. And so PRB did get us that list of scrutinized companies, and so we sent a letter out to our money managers, and we just included it in the packet for your information on page 135. This is where we polled all the money managers and asked them to report back. One money manager did report back with activity from some of those businesses, and it was Wells Fargo. And so on page 138 is where we sent that information to the PRB to let them know. And the requirements did not require that we say to the PRB how much money was involved. It just required that we let them know what businesses our money managers might be doing business with on our behalf. Since then, according to the requirements, we sent a notification to Wells Fargo suggesting that if there's an opportunity to not do businesses with those companies, and it's not to the detriment of our fund, that we would suggest that they not do that. And so that is the extent of our requirements under that new requirement.
And just as a note, the Wells Fargo account is really more like a fund, and so it's all grouped together, and there's usually not a means for them to, pull out those securities, because we're invested as everyone else is invested in that fund. But we did our due diligence and provided the letter and provided it also to the BRB. Thank you. I guess since we have Charles and Jeff here up front, we'll go to item D so they can report on the asset allocation and investment performance. Gentlemen, the floor.
Jeff, why don't you jump in?
Thank you very much. Let's go to page 1, the market commentary. And at the top of page 1, you can see that the S&P 500 index was up over 10% in the fourth quarter. That was great, but the big story was what happened over the last year, 2013. For the year, the market was up over 32%. This was the best year in the stock market since 1997.
So far this year, the market is up about 2%, and last night the market hit another all-time high. Now let's go quickly down that first column. If you look at the Russell indices, you can see that in terms of size, large cap stocks did better than small cap stocks if you compare the Russell 1000 to the Russell 2000 index. In terms of style, growth did better than value in the large cap area of the market, while value did better than growth in the small cap area. Now moving on down to the middle section, the MSCI indices, those are the international stock markets. The EFA index, which represents developed markets like Japan and Europe, was up about 5%, mainly because of Europe. If you go two rows down, you can see Europe was up over 7%. And if you go two more rows down, you can see that emerging markets like China and Russia, Brazil, the EAM index shows you they were up about 1%. And for the year, emerging markets were actually down about 2%. Now, if you move down two more rows, you can see that the REIT index, or the Real Estate Investment Trust Index, was down about 1%. And the commodity index was also down about 1%. And for the year, commodities were down about 9%, mainly because of the declining price of gold. Now, the last section here are the bond markets. The broad bond market, represented by the aggregate bond index, was down slightly, losing about 0.14%. But high-yield bonds were up about 3.5%. So bonds were mixed in the fourth quarter. Let's turn now to the next page to look for some explanations. On the first bullet point on page 2, the U.S. market was up for mainly three reasons. U.S. economic data continues to gradually improve. Corporate earnings have been growing steadily. And the Federal Reserve finally made its long-awaited decision to start reducing or tapering its securities purchases, or stimulus. Moving to the second bullet point, the international equity markets generally posted good returns as their central banks provided stimulus and their economic growth continued to recover. Emerging markets, though, struggled, including disappointing growth in China. Now, if you'll move to the top middle bar chart on this page, this is interesting because it shows how mutual fund investors, where they're taking their money out and where they're putting their money in. If you look at the red bars, this shows you that mutual fund bond mutual fund investors have been gradually taking money out of bond funds as interest rates have been going up. The blue bars show you that investors are putting more money into stock funds as the market has been going up. So that makes sense. And then the last three bullet points on this page just briefly mention how unemployment has been gradually ticking down. It's about 6.7%. Oil declined slightly to about $98 a barrel. And lastly, inflation remains fairly tame. Inflation is running at about 1.1% per year, so that's good news. Let's turn to the next page, page 3, to look at the U.S. bond market. If you look in the upper left-hand corner at the yield curve, you can see in the lower left-hand corner of this curve, short-term interest rates remain at about 0, and that's simply because the Federal Reserve is keeping rates at 0. And just over the last week or two, the new chairwoman, Janet Yellen, mentioned short-term interest rates will probably remain at 0 until mid-2015. But, of course, they can change that later if they want to.
Well, she said for some time, or something nebulous like that, which we're interpreting to mean the middle of next year. But.
Oh, you're right. It could be interpreted differently. And then if you go into the middle right section of the bar chart, shows you that the bond markets were mixed. The best part of the bond market were high-yield bonds, up over 3.5%, as investors continued to take more risk in order to get higher yields. And for the second quarter in a row, long-term government bonds were the worst-performing sector, as investors were generally moving out of safe haven assets and into the riskier assets. So that's kind of a repeat of the third quarter. All right, let's turn now to the next page and look at the U.S. stock market. Skipping down to the fourth bullet point, real estate investment trusts were down about 1% as rising interest rates hurt stocks that pay dividends. This is important because it helps explain why your Robeco Large Cap Value Fund did well in the fourth quarter. They are underweight REITs, which have lost money the last 2 quarters. Now, if you look at the middle right section of this page, you can see that all 10 sectors of the stock market were up. That was good. Industrials were the best sector, up over 13%, an optimism about improving economic growth in the U.S. Utilities was the worst performing sector, only up about 2%, as investors were generally getting out of those lower risk assets. Now let's turn to the last page, the international equity market. In the upper left-hand corner of page 5, you can see that the U.S. dollar was down against the euro and the pound, but up strongly against the yen and also the Brazilian real. And in the middle section of this page, you can see that most international stock markets did well, especially India. India was up over 12%. They have a new central bank chief who's finally starting to take actions to control inflation and support growth. Meanwhile, Brazil was one of the few areas that had negative returns. Brazil lost over 5%. They've got several problems. The economy is weakening, their commodity prices have been generally declining, and they have a worsening fiscal condition. And this is important because it helps explain the underperformance of your Wells Fargo Emerging Markets Fund. They have an overweight to Brazil, and that hurt, and I'll explain that in just a few minutes. All right, that's it for the market commentary. Now let's turn to the executive summary, tab B, page 1. And at the top of page 1, I'm sorry, page 7, sorry, first sentence, you can see that total assets in your plan rose to about $87.3 million at the end of December. And if you look at your February flash report that hopefully you received, you can see that at the end of February, total assets continue to rise, and assets at the end of February were $88.4 million. So that's where they stood at the end of February. In the middle section of this page, you can see that current allocations of your funds are fairly close to the target allocations, so there's no need to rebalance at this time. And if you look at the lower section of this page, you can see that your plan is outperforming its policy index over all time periods and by fairly significant amounts, so that's good news. All right, if there are no questions about this page, let's skip to page 12. So on page 12, you can see that generally speaking, all of your funds are doing well in the long run. I'm going to just comment very briefly about those that are in red. Atlanta Capital is trailing its peer median and benchmark over 3 years. However, they had a really good fourth quarter. It was your best performing fund in the fourth quarter. And now, if you see on the right column, they now exceed their benchmark over 5 years, and they rank in the top third over 5 years. So Atlanta Capital had been struggling, but they are now making a comeback. Luther King, slightly below median over three years. It's mainly because over the last 2 years, their style has been out of favor. They favor the really high-quality stocks, and the market has been favoring the really low-quality stocks. So we like their strategy, and their style is just simply out of favor.
Jeff, is that something also that's for the reason for Atlanta Capital, because they're out of favor?
Yes, Atlanta Capital style is also high quality, but their stock selection was so good it offset the fact that their style was out of favor.
Great.
Yeah.
And we haven't seen all the data yet, but it looks like this quarter, high quality did a little bit better than low quality.
When you say this, you mean the fourth or first?
I mean the first quarter.
The first. I got mixed reviews on that.
Yeah, we got mixed on that, but if we start to see some change where higher quality, which it does over long periods of time, starts to outperform low quality, your preponderance of higher quality managers should do a lot better.
Are these rankings based on gross performance numbers or net?
Gross.
And what would...
Separate accounts are gross.
Okay, do we have any numbers of what they look like net?
Yes, we'll come to that very shortly here. Peer Capital was lagging its peer median very slightly over 3 years, but they had a fantastic year last year. They were your best performing fund for the year as a whole. We'll talk about that in a minute. So they're doing very well. Wells Fargo is very similar to Luther King. Wells Fargo favors the very high-quality stocks, and just like Luther King, they've been lagging over the last 2 years because their style have been out of favor. Just like in the U.S., overseas, the markets have been favoring the lower-quality stocks, and that's not what Wells Fargo does. But their strategy is very good in the long run, so we're no serious concerns. So all in all, if you look at the total fund line, your plan ranks in the second percentile. That's almost as good as you can get. Very good. And of the two recommendations, we're not recommending any changes. Number 2, if you remember last time, we put the T. Rowe Price International Bond Fund on watch, not because of performance, but because the portfolio manager changed as of January 1st. I was looking at his performance over the first quarter so far this year. He's an outstanding. He's in the top third, so he's doing well. We'll probably keep this fund on watch for a few more quarters just to make sure that the performance continues to do well. So all in all, it's generally good news, and we're not recommending any changes. So if there are no questions, let's go to page 13. So on page 13, if you look at the top line here, you can see that your plan is outperforming the TESRS policy index over all time periods. That's good. And it ranks in the top decile over all time periods, which is very good. There are two reasons why this is occurring. First, you have really good managers, but the second reason is you have an overweight to equity. So the average defined public pension plan has about a 60% allocation to equity. As you can see on your plan has a 77% allocation to equity. So that overweight to equity has really helped you in the last few years as the stock market has outperformed the bond market. Any questions about that page? Taylor, I think you had a question that might be answered. Oh, okay, we have gross and net. So the first pages 13 and 14 are gross, and 15 and 16 are net returns.
The reason we look at both is because the universes for most of the managers that are separate accounts are also gross. So that way, if you're doing universe comparisons, it's gross versus gross. You've got some funds, so some of those will be net versus gross. Obviously, you want to look at everything after fees. Mm-hmm. But when you're evaluating managers, gross versus gross, I think can be helpful. So we print as much paper as we can and give you both.
All right, well, let's skip to page 19 and look at a new exhibit. We just added this on page 19. Yes, Don?
I just have a real quick question. When we say rank, are you talking about rank in terms of deciles and percentages, or are you talking about rank in terms of we have this many in the universe and we're fifth or we're third? Or...
Oh, deciles and percentages.
It's percentage.
So when you say two, we're the 98th.
You're at the
top 2%.
Top 2%.
2%.
No matter how big the universe is. So okay. Small cap might be 3,000 managers, and large cap might be 6,000 managers.
Okay. Thank you.
So how many are, so when gross performance, we're ranked number 2 over the 5-year benchmark, how many are in that universe?
That's on a different page.
Let's see.
I think it's on each manager's.
We certainly have that for each manager.
Yeah.
Let's see, for the total fund. Good question.
Or a follow-up question, or a different way to ask it would be, you say basically our performance is really good because we're overweight equities. Do we have a smaller universe of funds that are similarly invested like we are?
No, the most we can carve up the plan universe is by corporate versus public. And there is some division on size, but in the public space, I don't think we have that many choices. If we picked a universe of retirement plans that were close to yours, it'd be like 10 plans. Mm-hmm. It's the Investor Force universe, so it pulls your data, Mellon Bank and some other trustees, and piles it all up. I'm not sure how big the total universe is, but we looked at carving it up, and it was a little misleading because the universe was so small.
Yeah.
On the plan level.
Yeah. So it's more important to look at the individual managers. I guess that's the best way to look at it.
Can I skip to the scatter plot?
Sure. Yeah. Any order.
Let's say go to page 24. I'm a visual guy. Jeff's a spreadsheet guy. That's why we work well together. If you look at that 5-year scatter plot on the right, on page 24, so this is risk return analysis. So standard deviation, volatility is down there on the bottom axis. Return is there on the left. And the shaded area represents, standard deviation either side. So what is it, 66%, 68% of the total. All those other red dots are other public plans.
It says 144 portfolios.
Yeah. So all those other dots are others. They may have private equity, they may not. They may be water districts, they may have 20% equity. And then there's your dot, the
blue square.
You can see it's pretty high up, which means you've generated a pretty high return compared to your peer group. You're also over there to the right, so a little more risky than the average public plan. But it is just public, so you're not in there with corporate plans that are doing LDI or something like that. So, sorry, Jeff.
No. So that's the answer. 144 plans. So let's just wanted to show you briefly a new exhibit on page 19. Jenny had requested this a few quarters ago. So this is a picture of total assets, showing you how your total assets have generally grown over time, up to $87 million at the end of December, and you can see that steep decline in 2008. So some people like pictures, and so this is a good way to see how your assets have grown. All right, well, if there are no questions about that exhibit, let's jump to page 31 and look at your funds one by one. Okay, page 31. So this is your intermediate bond fund, PIMCO. They had a mixed quarter, outperformed their index a little bit and lagged their peer median a little bit. What helped in the fourth quarter was good security selection in non-agency mortgages, Build America municipal bonds, and high-yield corporate bonds. They also did well underweighting the Japanese yen. If you remember in the market commentary, the Japanese yen fell significantly. That was good by underweighting it. But what hurt is they underweighted investment-grade corporate bonds, agency mortgage-backed securities, and they had a small exposure to Brazilian bonds. This fund does have some international exposure, a little bit, and that hurt. So it's kind of a mixed quarter. Now, but overall, they still have very good long-term performance. I do want to mention an organizational change that occurred just last month. On your desk is a memo that we wrote about PIMCO. If you'll turn to that. Just in a nutshell, last month, one of their two co-chief investment officers, Mohammed El-Irian, left the firm. Apparently, he had a personality clash with the other co-chief investment officer, Bill Gross, who is also the portfolio manager of your fund. And we're not seriously concerned about this organizational change. PIMCO is very deep. They have a lot of people who can take their place. But we wanted to mention this because this story has received a lot of press, and we didn't want you to be worried about it. And we think their organizational structure is fine. We will keep an eye on this fund to make sure that the strategy does not change and that this organizational change doesn't affect the performance. But just want to let you know that there was that organizational change. Any questions?
Would you be asking the board to put PIMCO on watch for this reason?
No, not at this time.
Okay.
If performance starts to deteriorate, we might consider it later, but not at this time. Okay.
Mohammed wasn't involved in this fund at
Right,
all.
not at all. He was a chief investment officer and
Had some oversight, and I think he ran a money market fund, and I think he ran two funds.
right,
Bright guy.
but nothing to do with this fund. Okay, let's turn. Oh,
Connection with Doug Hodge.
No. No conflicts to disclose there.
all right. Let's go to page 43. Page 43 is your international bond fund. Here. So in the upper left-hand corner of page 43, you can see the performance of this fund. Generally speaking, it's doing very well. In the fourth quarter, it outperformed both the index and the peer median. And you can see that over all periods, it ranks above median. Especially over the longer periods, it ranks in the top third. So generally speaking, it's doing well. In the fourth quarter, what really helped were several things. They overweighted currencies like the Mexican peso that's done well. They had good security selection in European government bonds that did well. And they overweighted corporate bonds in Europe, especially high-yield corporate bonds in Europe. So they did very well in the fourth quarter, and so we have no concerns about their performance. I just want to remind you, back on January 1st, they had that portfolio manager change. And again, the new portfolio manager, Arif Hussain, has done a great job. He's ranking in the top third as of the end of March. So things look very well for T. Rowe Price.
Can I add something?
Yeah, please.
Just kind of a more strategic point of view. You'll recall in our investment policy statement, what we've said, we want our managers to be better than average over a full market cycle in the 3-year and the 5-year. So better than median. So we compare managers to peer groups. If you look at this page where it says rank versus peer group, we certainly have numbers there, but the universe is only 60 managers. That's a pretty small number. So within the policy statement, we say we look for that performance where appropriate. At some point, I think the peer group comparisons here are going to be meaningful, but right now, 60 is a very small number. So I wouldn't put a lot of weight in that relative performance. It's all about the performance versus the benchmark. I think that's the only case where we do that.
That's right. It's
maybe MLPs at some point. That'll be a small peer group.
That's true. MLPs
There's
has
not many of those.
That's true. MLPs.
So once we get those funded, have you guys talked about that already?
Okay. All right. So those are your bond funds. Now let's move on to your equity funds. Let's go to page 50. So on page 50 is Robeco. Robeco is your large cap value fund. It continues to do really well. It continues to outperform both the index and the peer median over all time periods, and it ranks in the top quartile over all time periods. So what happened in the fourth quarter, great stock selection in communication stocks like IAC Interactive, and good stock selection in energy stocks like Phillips 66. They also were helped by an underweight to real estate investment trusts and utilities. If you remember in the market commentary, real estate investment trusts and utilities were two of the worst performing sectors. This fund is significantly underweight those sectors, which really helped in the fourth quarter. So that's about it for Rubico. They're doing very well, and they've been one of your top performing managers for several years now. Let's turn.
You had them, what, 3 years now?
5 years. Can you believe it's been
5
5, beginning of '09? Time's flying by. Let's go to page 52. Page 52 is Atlanta Capital. This is your large cap growth fund. And as I mentioned earlier, this was your best performing fund in the fourth quarter, up over 12%, ranking in the top quartile. Now, up to this point, this fund had been lagging over the last couple of years because its style had been out of favor. They favor those high-quality stocks while the market's favoring low quality. But their stock selection was so good in the fourth quarter that offset the style issue. What helped in the fourth quarter, great stock selection, especially in technology stocks like Google, up 28%, Apple, up 18%, Gilead Sciences, up 19%. Also did well in consumer staple stocks like the drugstore CVS. CVS was up 26%. So great quarter, and if their style ever comes back into favor, that'll be a nice tailwind. But so for right now, I would say they're finally starting to make a comeback.
How does it look so far for this year?
I spoke with them a few days ago, and they said it's kind of they neither outperformed or underperformed. It's just kind of right near the median.
Okay.
So, all right, let's turn to page 58. Page 58 is Luther King. Luther King is your small cap core fund. You can see in the lower left-hand corner, they slightly lagged their index in the fourth quarter and were below median. Just like Atlanta Capital, just like Wells Fargo, they favor the very high-quality stocks, and their style has been out of favor as the market's been favoring lower quality. What hurt specifically in the fourth quarter also, stock selection in energy, industrials, and consumer discretionary. But again, the main reason is the style issue. They favor stocks that have strong competitive advantages, strong financial returns, and they want their stocks to trade at very attractive prices. And so that helps define what I mean by low quality. I'm sorry, high quality. So we like their strategy for the long run, and we're not too concerned that they're currently underperforming. All right, let's go to page 64. Gracie, you mentioned just out of the cafeteria, how has Luther King done so far this year through March? They are slightly underperforming, but the reasons are pretty good. They have a zero exposure to biotech companies. They believe biotech companies are especially risky because they have binary outcomes. Either your product is approved by the FDA or it's not approved, creating extra risk. They have no exposure to real estate investment trusts. REITs have actually done very well so far this year. And they have no exposure to utilities. So those are the three main reasons why this fund has lagged a little bit so far this year. But we would continue to say they're favoring those higher quality stocks, and so we have no serious concerns.
Okay, thank you.
All right, let's go to your small cap growth fund, Pure Capital. That would be page 64. So on page 64, you can see for the quarter in the lower left-hand corner, they had a decent quarter, outperformed their index, just slightly below the peer median. What hurt in the fourth quarter, good stock selection in healthcare, financials, and in technology, especially technology stocks like Fluidigm. Fluidigm was up 74% in just the fourth quarter, and Calidus Software up 50% in the fourth quarter. But the really interesting story is how they did for the year. If you go back, if you look at page 64 and look at the one-year column, for the year they were up over 52%. This was your best fund for the whole year. And to give you some examples of the stocks that did well last year, Spirit Airlines, Lithia Motors, and Fluidigm. There's Fluidigm again. So this was just a banner year for this fund. So even though they're slightly lagging the peer median over 3 years, we clearly think this fund is back on track.
Now, I know that this, excuse me.
Sure.
I know that this fund, for their good performance, their fee, we pay like, I forgot the term, but
Performance fee.
there we go.
Yeah.
Are we earning more even though we're paying a higher fee when they perform well? We are. Okay.
Yeah, when they underperform, their fee goes way down. And most of the time, they outperform. Remember, these guys were on a watch like
I know.
8 years ago or 6 years ago. We're like, oh no, what's going on with Jan?
Jan Parsons.
Yeah, and then right before, and all of a sudden, wow.
And I noticed that it's been performing very well. But it's one of those companies that they're few and far between where now you pay a performance fee. So I was just wondering if we
You don't see that too much. There's actually some mutual funds that have performance fees, not too many. Fidelity's got a few. I think T-Row's got a few.
There are a few out there.
A few, not too many.
Okay.
But
As long as we're doing better than what we're paying out, I guess that's a good thing.
Yeah, the way the performance fee is calculated, they were underwater in 2010, 11, and 12. They had to make up for all of that underperformance to earn that performance fee. So it was a good deal in the long run for everyone. Okay, let's now turn to...
Sorry, how is the performance fee calculated? Or the incentive fee?
It's a certain percentage. I can't remember the exact number of basis points, but they get a small share of the outperformance, the performance over the Russell 2000 Growth
And
Index.
it's not hedge fund like.
Yeah,
It's
yeah,
not
yeah.
220.
Oh, yeah. No,
It's 70 bips, but when we outperform our benchmark and you've made it up for your losses, it's, 80. It's a very small increment.
So when you say underwater, there's a high water mark
Yes.
relative to the benchmark.
And they were
Okay.
below water for 3 consecutive years. They had to come up above that high water mark and then some. Okay. Let's go to page 70 and look at your international equity funds. So on page 70, this is Oppenheimer. Oppenheimer invests primarily in developed markets like Europe and Japan and Australia. They had a good quarter and a very good year. In the fourth quarter, they were up in the top third. What really helped was great stock selection in Japan, Switzerland, Spain, and the UK. In the UK especially, one stock in particular, BT Group, the British telecom company, did very well. They also did well with an Italian internet retailer called Yoax, and also in the Netherlands, a company called Alberts, which is an industrial company. So if you take a step back and you look at their performance, they continue to outperform both the index and the peer median over all time periods. So this is one of your very best funds. So really, no complaints. Let's turn to your last fund, which is Wells Fargo, on page 76. Unlike Oppenheimer, which invests in the developed markets, Wells Fargo invests in the emerging markets like China, Russia, Brazil, and India. And as you can see in the lower left-hand corner of page 76, they underperformed in the fourth quarter. And there were basically 3 main reasons. One, they were overweight to Brazil. If you remember in the market commentary, Brazil did not do very well. Well, the reason they're overweight Brazil is they're bullish on certain companies as a way of getting indirect exposure to China. So as an example, there's a stock they own called America Latina Logistica. It's a transportation company that carries much of the agricultural products from Brazil to China to feed the middle class in China. And so this company ran up against some capacity limitations in the fourth quarter, but the fund is still very bullish and thinks this company will continue to grow and be able to provide more agricultural products to the growing Chinese middle class. So that's why they're overweight to Brazil, stocks like that. They also were hurt slightly by stock selection in China. Internet stocks like Ctrip.com, which is kind of like a Travelocity in China, and Sina, another internet stock. Ctrip.com doubled in price last year. So for the year, this was a big winner. But in the fourth quarter, a lot of investors took profits. And so for both Ctrip.com and for Sina, the stocks lagged a little bit, not because anything bad happened, is investors were taking profits from huge gains earlier in the year. But one last thing I want to mention about Wells Fargo. Just like some of your other funds, this fund really focuses only on the higher quality international equity stocks. And so that has hurt for probably 2 years in a row now as the market has favored the lower quality. And so if you look at the long run performance is very good. We think this strategy is good for the long run. So like the others, we're not overly concerned that it's currently lagging. Now, if there are not any questions about Wells Fargo, I do want to mention one last thing, Harvest. Even though we haven't funded Harvest, hopefully you have a handout there with you. If you can turn to page 5 in the Harvest handout, we just wanted to show you how Harvest did in the last 3 months of last year and for the year as a whole. So if you go to page 5, this is how Harvest MLP composite did. If you look at kind of the left side, the middle section, you can see that over the last 3 months of the year, they easily beat the index. And for the year as a whole, they were up over 35%, also beating the index. So this was a great year for Harvest and MLPs in general. So I just wanted to mention that, we think you made a good choice by choosing Harvest. Well, I guess that's it for the funds. Any questions? Generally, it's good news.
I think we're in a good place right now. Does anyone have any questions? Gentlemen, thank you very much.
Sure.
Appreciate it. I guess the next item that we have is discussion on the investment returns and assumptions report by Judy Johnson. Oh, I'm sorry, Judy. One more thing. The LMP funding update. Michelle. Sure. Since we were just talking about Harvest.
And Jim may want to jump in here too, but Jim had some difficulty obtaining an MLP type agreement for us to use as a basis for our agreement with Harvest. And he was able to get a hold of one, and it's in process at the Attorney General's office. We expect to be able to report by the next meeting that we have one that's been executed.
It will be well in advance of the next meeting, in addition to early difficulties in the illness, and we tried to get a sub from the AG's office to finish the contract, and that didn't happen, but it's back in my hands now. And it's more complicated than your usual contract, so I spent a little bit of time on it. And so, but it'll be done next couple of weeks.
Will we be able to, as soon as that's approved by both sides and signed, able to fund it without having to wait until the next meeting?
Yes, you already have that authority.
Yeah. Okay.
So all we need, Jim, then all we need is get the contract done and signed, and then we're clear to go ahead and fund it? All right, sir. Good.
Very good. Thank you. Okay, now I guess we have Miss Judy.
Okay.
You can pick either chair. Thank you very much. Who's the more?
This is Judy Johnson, the contract accountant. And if you would turn to page 139 in your book, you will see the investment returns and assumptions report, the PRB 1000. We just wanted to call this to your attention as it is a new requirement as of the last session. This was a requirement imposed by House Bill 13 to all Texas public retirement systems that they report investment returns and certain other actuarial return information. And the PRB 1000 was what the Pension Review Board came up with in order to fulfill that requirement. So I'd be glad to answer any questions. We worked together with both Milliman and Red and Wisdom in coming up with these numbers. So if you have any questions, I'd be glad to answer them.
Based on your understanding of the bill and the Pension Review Board, do you have any idea what they're going to do with this information, how they're going to look at it? Are they going to look at ours and go, how nice? Or are they going to look at ours and go, we need to fire all those trustees?
Well, And Michelle may be able to speak more to that matter, but from my involvement in it, I feel like that this is an undertaking in order to go forward, to have some sort of consistency, and I think at this point in time, it is kind of a work in process. That they did give a list of requirements in compiling this, but also there in discussions with them, there is some individual leeway. So I think that they're trying to get to a point where a good point of comparison at this point. Did that answer your question? Or Michelle, do you have anything to add to that?
I think that's accurate. From talking with Chris, they don't have any plans of how they'll use it. They were required to collect it, and it is a way for pension agencies to get in the habit of, keeping track of this information and having it available. So,
Yeah, I mean, the primary information it looks like is how are your assets actually doing compared to what you're assuming your assets are going to do. But then what they're going to do with that monitoring and what we should be doing with the monitoring is a little bit more ambiguous at this point. So it doesn't look like we're doing too bad relative to our assumptions over the 1, 3, and 5. So even 10 isn't too bad. So probably the answer is at this point we submit it and march forward, I guess. So.
Yeah, I'm sure that determination will be made as the process progresses. This is the first year, so I think it's definitely a learning year.
Anyone have any other questions? Thank you, Judy. That concludes our investment committee report.
Okay. Any other questions? Does anybody have any questions for the committee? Okay. Let's go back and look at the meeting dates for June. And again, convention starts when? Dan, did you say?
The SFFMA convention starts on Friday, June 6th in Lubbock for the first executive board sessions and some committee meetings. It will run through that following Wednesday, the 11th, with the final business meeting and elections and adjournment by midday on Wednesday, the 11th. Their calendar for that conference, as always, is filled pretty much day and night. There's not much free time. They have an educational track. They've got a trade show. They have memorial services, hospitality nights. So that's a real full plate. During trying to do anything during their conference probably wouldn't make them real happy. So if we could adjust or look at adjusting our meeting date, right now it's sitting on the 9th and 10th, which will be right in the middle of the conference. Either moving that up earlier, potentially the 4th and 5th, or pushing it out to possibly 11, 12, or 13 would fit better with that conflict. Now, whether we talk about swapping the dates of meeting in Austin, meeting in Amarillo, and try to have this meeting in June in Amarillo to coincide and be in the vicinity is another option. So we need to kick that around a little.
As far as Amarillo, Mr. Chairman, I'm good if you want to swap, or if we just want to stay in Austin in June and do the Panhandle meeting in August. Either way, we can make it work. Whichever is the board's consensus is fine with me.
Okay. What are the board's feelings?
Well, I have a question about the meeting, and you said that the conflict meeting ends midday on Wednesday? the 11th?
Yes, they have a morning final business meeting and an election of officers, and the conference usually adjourns by midday on the final day, the Wednesday, the 11th.
So I guess the way that would end up would be that that afternoon would be a travel day. We'd meet all day on the 12th and then half day on Friday, the 13th, and then come home the afternoon of Friday, the 13th. Would that be sort of the way we would structure it? I mean, that sounds reasonable, anyway.
Friday the 13th.
If you went up north, if you went down south, it might be, because you're just talking about a half a day travel, you know. If we're going to Austin to have the meeting, then that might not work. But if you're going to stay up there, I could see that working.
But that was the way that's the way I was discussing it. If it's more convenient. I'm indifferent to June or August myself in terms of when we travel, because I'm not going to be at the other meeting anyway.
One thing that I think the folks from Pasadena mentioned is that if we do want department participation, it might be helpful to have it in that area during that time, and they could leave the convention, and if they wanted to address the board, come to the board meeting. Just a thought.
So, are you looking at doing it maybe the 11th, where you're going to have a large concentration of pension members in a central location, and then try and hopefully get a little more attendance from our membership?
The 11th, you will have that audience of folks there, but just keep in mind that they have already been there for almost a week, and they're going to be in Lubbock, and for them to decamp Lubbock on Wednesday and come to Amarillo or wherever is going to be a little bit of a stretch. If we look at the other end of the meetings, having ours on the 4th and 5th, people maybe en route to the conference potentially get there a day early and come talk to us on the 5th, and then go to Lubbock on the 6th. It's sort of a toss-up.
I mean, either way, they're gonna if they're gonna participate, they're gonna have to add at least a day to their trip. So it's just a matter of whether they want to do it at the beginning or at the end. And
I'm curious how many, no disrespect to any other departments, but, and I think Pasadena's got a good idea, but how many would truly, you're already gone a week? Most people are like, I'm going to go home. I mean, I hope they do. I hope they take hey, I'm just right here, I want to stay, but I'm thinking of what I might do, and I'm thinking, I've been away for 5 days, I'm probably going home.
I want to get home.
Yeah.
Would there be any, I don't know, stomach on the part of this committee or this board to piggyback a couple hours of available time in Lubbock on Wednesday, so that they just have to walk out of their meeting? If they want to chat with us or have a public comment, we could have an abbreviated public comment session at that meeting. I mean, I'm just throwing it out there. I'm not sure I'm supporting that or not, but
I think after this meeting this afternoon, we're going to SFFMA. That might be something to mention to Chris and his staff if he thinks there might be interest in us having I don't know what we would call that, kind of a satellite public comment invitation.
An opportunity to beat on us about the 15%.
Yeah.
That's what we're going to call that, I think.
But I like the idea of bringing the meeting to them. That gets more potential participation from those folks. It might certainly be a good way to foster some more goodwill with SFFMA.
From the agency side, what kind of issues does it cause for us to move our June meeting to out of Austin? Do we have any commitments right now with hotels, etc., for June in Austin?
I don't think it's something we couldn't move to August instead.
We have no, the hotel is reserved, but we can back out of that contract, and this room is reserved for June, and we can change it.
Okay.
I mean, I think if we're trying to get them there, to me, it doesn't make any sense to move it to Amarillo and make them travel. If we're going to move it, it makes sense to move it to Lubbock, so we're right there. Otherwise, you leave it the same.
Oh, well, that would be a possibility, too. Just completely change our meeting, are you saying, to Lubbock? And we have our first half-day Wednesday afternoon, and have a full day on Thursday, and stay the night if you need to, or fly that night?
The host hotel for the convention is the Overton, and I know they're totally booked.
Are they booked for Wednesday night?
Well, and that's where I was going with that. I don't know what their availabilities might be as SFFMA moves out and we move in, but that's something that Gabby Glass can tell us in a few minutes when we get to.
And if we did that, we would still keep our August Amarillo meeting.
Or that, or I was going to make the suggestion a little different than Steve. I mean, there may be some other departments a little further. I know it's 100 miles, but we could have the comment period for the people that are there at the state. You know, you say they're done at midday, so if we had a comment period at 1 or something, let people come, and then we could move on to Amarillo, and then maybe other smaller departments that aren't able to go to the convention, that we're giving them multiple opportunities or something at 2 different times and 2 different locations. We're trying to be transparent and let them know and give us a chance to beat us up if, we're not trying to hide. This is what's happening. So either way you want to do it.
Yeah, and that's not a bad idea either. And because maybe there'll be a department out there that's got a better solution than what we've got. I don't like the surcharge or the tier 2 any more than anybody else does, but it's something we've got a fiduciary responsibility to the fund to make sure it's here. And if they have a better idea, I'd like to listen to it. So it's just a matter of, and I'm not opposed to having the whole meeting in Lubbock and then just do our regular travel meeting in August to Amarillo. I mean, that'll work too. We just have to fly twice instead of once for me, because it's easier to drive to Austin than it is to fly for me. But
I think I'll drive it. The only way to fly to Lubbock from Amarillo is by way of Dallas.
So.
Do y'all want to check that? So I think you're talking about a public hearing type thing. I like the idea of being able to explain what our vision is for this solution to our problem. I think that's important so that there's not misinformation about why the rule's being suggested.
And we've had hearings at conventions before. Or not convention, we had it at fire school. Fire school one year, didn't we?
Yeah. On a adjustment to benefit.
And we may be able to get a hearing on Sunday or Monday afternoon at convention where it won't make people stay an extra day.
Where it will or will not?
If we, for example, most everybody comes in Saturday, maybe there'll be time in the schedule, Saturday or Sunday, to have a 2-hour hearing or something, public hearing.
I know that
You're more familiar with their scheduling than I am.
Right. The pension, there is a pension report in the business meetings, and either the commissioner or the executive director or a member of the board, I think Frank, you and I gave that report in Houston, a couple of years ago. So there is a spot in the agenda of the business, one of the business meetings, for a report. Now, if we want to set up a public comment session, or I don't know if a breakout meeting would be possible at this late stage. Like I say, this thing is pretty tightly structured at this point.
Well, I think, Mr. Chairman, I think we ask if the Overton can handle this, let's have the hearing on the 11th, have our meeting on the day of the 12th and the morning of the 13th, and let's just do it in Lubbock and leave everything else like we said earlier. I mean, that seems to be kind of the consensus if Lubbock can handle this, and I'm sure they can because the majority of the people are probably going to be leaving, and especially if we can get it advertised through the association that we're going to be there and ask them to stay an extra hour I think they'd be more apt to stay an extra hour to see us than they would be to move or do something like that.
Okay, we can do that, and we'll meet with Chris this afternoon and see. We'll mention it to Chris and see how they can help us out.
So we're talking about rescheduling the June meeting for the 11, 12, and 13 in Lubbock. Is that what I'm hearing?
Is everybody good with that?
August meeting in Amarillo stays as is.
Yes. Will that fit into everybody's schedule? I think that we'll keep those 3 days open with hoping that we can do everything on Wednesday afternoon and Thursday. And that way, if anybody wants to head back on Thursday, they can. Because we have, yes, sir.
Jeff and I are only available on the 11th and the 13th.
Okay.
We're happy to help you on the 11th if we can.
Well, I think on the 11th, we would start at 1 or noon even, depending on when the other meeting's over, and we only expect a couple hours, so I would think we could do the
We can take care of some business on the 11th.
Do some on the 11th, just make sure our agenda says we're going to do that.
Right. And we'll get with our AG rep and make sure that we word it appropriately. All right, so that's what we'll do. We'll have Michelle. Michelle will send out an email we'll try and get an email out by the middle of next week with all the details for the beginning details for the meeting.
Sorry about that. I'm
glad you caught it now.
We caught the conflict, yeah, or we'd have been weeks trying to arrange and get everybody on the same page. Thank you.
Okay, so that'll be the plan, and then we'll just stick with the Amarillo in August. Okay?
Yes, sir. Hey, man.
Yeah, unheard of, right?
Well, y'all commented you hadn't been to the Panhandle. Well, here we go.
Here we come.
We don't consider Lubbock.
Ooh.
They're the South Point. They're the South Point. They don't either. They don't.
Yeah, they won't take it.
No, they don't.
Okay, is there anything else? Any agenda items that anybody can think of that we need to make sure is on our agenda for June?
Legislative going to be on there?
Yeah, we've got the legislative issue, and even before we get to June, is there a need to have any particular committee meetings like the legislative to deal with our 2 and 3 person department issue, or do we need to get the
We have that
audit?
issue, and we have to find out about Michelle's being able to go retroactive.
And then we've got the audit, selecting a new auditor, which we really need to jump on quick.
Yeah, you actuarial and audit probably gonna have to.
So I think those items should all be on the agenda for June, even though there may be
remember,
some committee meetings.
yeah, you may be limited on the number of people that will even be eligible to bid on, depending on what the minimum
requirements are.
Mr. Chairman, we tabled at the last meeting that issue on being able to mannerism on leaving if you were to want to leave. I forget how we talked about it. Do you know what I'm talking about?
If the department wants to pull out?
Yeah, if they want to pull out or
I thought we figured out that the legislature says that was illegal.
No, well, we have to change the law, but we tabled it at the last, it was tabled it'd be a law change. Anyway, and I'm not saying that's the avenue, spoken to Michelle. She had a couple of thoughts and ideas on things maybe we could look at as well. I'm just saying, that's still on the table. That needs to come back on the agenda. And one of the departments that asked for it is up in the panel, so it either needs, I think we either need to get it off the table and handle it either in the June meeting or the August meeting while we're up there. I think that would be beneficial.
Maybe something we need to get on our June agenda to start
at the end, and then
hopefully finish it out by August.
And figure out what we're going to do if there is anything.
And maybe our ED can start meeting with the AG and
Well, and like I said,
see what options we
they're
have.
not 100% wanting to do that now, but it probably still needs to be addressed since it was placed on the table.
Okay.
And I guess I'd also like to get the AG's take on whether a department can reduce their contribution under our current rules and the law, or whether we need a new rule or whether we need a new law. And I'm talking about reducing it not below the minimum that we've set, but just reducing it.
I have a note that I will look into that. I haven't had an opportunity since you raised it earlier, but I will look into it.
And that would be something also maybe on the agenda. I don't believe we need to link that rule, though, to our actions on the 15%, even though we know that that might be a conversation, because the actual 0 to 15% surcharge wouldn't be effective all the way till the following September 1 in any event. And so if we decide we need to pass a rule, we decide we want to, and we need to pass a rule to allow reductions, we can do that over the course of the remaining year, and the reductions would then occur in September, September when the surcharge was applied. So I don't view those two as linked necessarily. One can come later, but I do want to get moving on checking it out.
Okay. Anything else? I will entertain a motion to adjourn.
So moved.
Motion, or second?
I'll second it.
Okay, does anybody want to stay over?
And we reconvene strategic planning in the morning, 8?
We are going to reconvene in the morning at 8 o'clock. Is it 8 or 8:30? I don't remember.
They have some light breakfast at 8 there for you, and then it starts at 8:30.
Okay.
Just shared it. Yes, sir.
Okay. We are adjourned.
Steve is your